Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the February 15th edition, the Valentine's Day, one day late edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode is produced by Paige Driscoll and the Everag team. Here we like to break down the latest NDPSR report. Let's start this week. Let's start with butter this week. This butter number, 240.96, is a plus 7.5 to the CME 1 week average of 234.45. So that is a 7.5 positive basis, well above our normal 2 cent positive basis. We traded 43 loads on the CME. All that volume on the CME did little to pull basis below normal levels. However, basis did contract a little bit from last week. You remember we were down 8 last week to get to that low of 227. The market kind of shook it off and came in at essentially 238 last week on the NDPSR. Then the CME moves 7 cents higher back to this 234.45 level. So on that 7 cent rally on the CME, we're looking at essentially a 3 cent rally on the NDPSR. So following along a little bit, seeing a little bit of a contraction of basis in butter, even with all that volume on the exchange. It's interesting that as the spot butter market adjusts to this new price level, we are maintaining higher than normal basis in butter. Moving on to cheese, the block, $2 even, 34 cents. That is a plus 4 to the CME 1 week average of 196.30. Now the CME was slightly higher week to week. Here you'll notice the NDPSR losing about 6 cents. So that means that we have basis contracting all the way down to plus 4, which is double our typical 2 cent positive basis. Next week on the CME, we take another leg down. So would not be surprised if that basis was higher than 4 cents next week as the NDPSR lags along a little bit slower than the movement that we are about to see on the CME. In barrels, 167.60, that's a plus 7 to the CME 2 week average of 160.23. Big volume on the barrel over the 2 weeks that I used to calculate that barrel benchmark number. We averaged 30.5 loads per week on the CME. It's interesting on this slide from in the barrel from the mid 80s down to the mid 60s and what is soon to be the mid 50s. Volume at the CME has been increasing. 30.5 a week is 30.5 loads a week is big volume at the CME. Similar to butter, even with that big volume, the NDPSR having a hard time keeping up with the losses that we're seeing at the CME. That plus 7 is slightly over our expected 4 to 6 positive basis for the barrel. So it's a positive basis number. And what's interesting, on the CME, we had a 30 cent block barrel spread. If you use that 196.30 block and the 160.23 barrel, on the NDPSR, a little bit easier, only a 32 cent block barrel spread. So the block basis coming in a little bit under the barrel basis. We see a narrowing of that spread, but at 32 cents, still historically wide. In whey, 39.88. That's a plus 7 to the CME 1 week average of 32.45. Now we expected higher than normal basis. That 32.45 was the low week at the CME before we rebounded back into the low 40s. Again, the whey market adjusting to a new price level at the CME. NDPSR trudging along. We had 18 loads on the CME, so that was good volume on the exchange. We're seeing that volume translate to actual weight here on the NDPSR, almost 6 million pounds, so about 1.5 million above our expected 4.5 million. If you want to go back to the January 28th NDPSR, typically most forward contracts in whey are based off prior week's NDPSR rather than the CME. Prior week's NDPSR in this case is that 40.02. So the manufacturer was able to move close to 6 million pounds at essentially flat basis to prior week's NDPSR. And I think the manufacturer would have to call that a win. And if you look back, the lower levels that we're seeing at the CME is translating to massive volume here on the NDPSR. 5 million or greater on all 5 weeks listed here on the last NDPSR report. That's a lot of whey changing hands. We'll see what they have in store for us in the weeks to come. And then lastly, non-fat, 124.15. That's a +8 to the CME 1 week average of 116.40. That 116.40 is the low week on the CME. We would expect higher than normal basis on the low week as prices at the CME move back north of the 120 level. We traded 19 loads that week on the CME. That volume is reflected here on the NDPSR and then some. Just massive volume, north of 26 million pounds at a higher than expected basis level. Impressive, to say the least, that the non-fat manufacturer was able to move such a large amount of weight at a positive basis. So this is week 2 of 4 for the February pricing cycle. Currently getting February class 3, 1790, Feb class 4, 1882. If you carry current CME equivalents out through the remainder of the 5-week March pricing cycle, getting a March class 3 of 17 quarter, March class 4, 1875. We'll see what they have in store for us in the weeks to come. Until then, I am Joe on behalf of Paige and the entire EverAg Insights team. Thanks so much. Bye-bye.